Hey, what's up you guys? Welcome back. So I promised that I make a video talking about something other than PayPal for this video. But before you click off, hear me out, okay? So I know a lot of you guys joined this channel specifically to hear me talk about PayPal. If that's you, welcome, first of all. So for you guys, I will make a compromise for this video. So I'm going to talk about something else first, but at the end of the video, I'm going to wrap it back to PayPal and you'll see what I mean in a few minutes. So in today's video, we're talking about Robinhood and why I think it could be an interesting stock after me doing some initial research into it. So I don't think I have to explain what Robinhood is. I think most of you are familiar with this company. Robinhood is an app that lets you buy and sell stocks and options. And Robinhood was a company that pioneered the commission-free trading model. So if you've been investing for a while, you probably remember a time when you had to pay per trade, right? So every transaction will cost you $10, let's say, whether it's buy or sell. And if you've been investing for a long time, you might even remember commissions were even more than $10 per trade. I think on some brokerages, they literally charged like $20 or $30 per trade back then. But that's no longer a thing, at least in the United States. But the commission thing is a fact that I am well aware of because, as some of you know, I live in Canada land, and over here it's still kind of complicated. I mean, some brokerages here in Canada are going commission free as well, but a lot of brokerages are still charging a flat fee. But in the US, a lot of people don't even know that commissions were ever a thing in the first place. So if you talk to an investor, especially if they're kind of new and they just joined the investing community, they would look at you like you're crazy if you ask them, hey, do you have to pay $10 per trade, right? Like, it's like, I've never even heard of that, right? So I know Robinhood got a lot of flack for the GME and AMC thing back in January of 2021. But I think that we should still be somewhat thankful that Robinhood made this huge impact in the investing industry, where their commission-free model is kind of now the standard in the United States, at least. And Robinhood went public back in summer of 2021. So it was kind of a bad time, I guess, to go public because it was shortly after their whole debacle with GME. But yeah, I mean, you could argue it was a good time as well because stocks were going up hugely in 2021. But in any case, since then, the stock has fallen about 80% since peak. So, you know, given that it's fallen so much, I think it might be worth a second look. So that's exactly what we'll do today. And once again, I know people have strong opinions about Robinhood due to the GME thing. And let me fill you in on what happened in case you missed the whole story. So essentially what happened was a bunch of people on Reddit basically figured out that shares of GameStop were extremely shorted. And if enough people started buying the stock, then it would trigger what's called a short squeeze. So when you're a short seller, you would borrow the shares and then sell them onto the market, and then you would owe the shares, right? So in order for you to profit, you're hoping to buy back the shares and pay back the shares to whoever you borrowed, and you would make money by selling high and then buying low at a later point. If you're right, the stock goes down and you're able to buy back for lower. So that's how you make money on stocks when stocks go down. But the issue is that when a lot of people are shorting, this could trigger what's called a short squeeze if people start buying again. So if there's buying pressure, the stock goes up, and then you're forced to buy back the stock because, let's say, there's margin requirements, right? There are usually requirements for you to maintain that short. And if you don't want to maintain that short anymore, you want to close the position and the stock is skyrocketing, then you're forced to buy it back at a higher price. And what happens is that this would also introduce more buying pressure, right? Because now, like, the retail investors are buying, and you, if you're a hedge fund who's short, you're buying as well. So everyone's buying, and then the stock just keeps going higher and higher. That's what's called a short squeeze. And it was during the peak hype that Robinhood prevented people from buying more GME stock. So this essentially killed the momentum of the stock. And it wasn't just GME, by the way. It was a few other stocks as well that were experiencing big short squeezes that Robinhood just basically shut down buy orders for. And some of the other ones, I think AMC was one of those. I think BlackBerry was also getting shorted and or short squeezed rather. So yeah, it was a couple of other stocks as well. So a lot of people got mad at Robinhood, and either intentionally or not, Robinhood did stop the momentum of the GME bull run to a large extent by preventing users from buying more shares, right? Because a lot of people, they only have Robinhood as their brokerage, right? So they can't open up another brokerage account fast enough in order to buy it on another brokerage account. So there were other brokerage accounts like Fidelity who did not have to shut down GME buys. So that's why a lot of people were also mad. It's like Robinhood in particular was experiencing this issue while other brokerages were not. So yeah, anyways, I just think that that was a really unfortunate circumstance for Robinhood because I think that the only thing that Robinhood really did wrong was they did a really bad job at explaining the reasons why they had to do that, like shut down buys, to the public. So a lot of people accuse Robinhood of working with the hedge funds to prevent GME from short squeezing. But, you know, examining the evidence, there's no real evidence to back that up. So I think here's where the mob mentality kind of took hold, right? People were obviously emotional, and let's face it, Robinhood kind of attracts retail investors with little to no experience investing and with little to no financial knowledge. So it's like, what are they supposed to think, right? When you're stopping them from buying their favorite stock. But what people don't realize is that here's what happened, right? Like what people don't realize is that the financial system is complicated. So Robinhood makes it look so easy and straightforward. And it's like you hit buy and then 2 seconds later you own the stock. And it only takes 2 seconds, right? But in the background, there's a lot of things going on. So whenever you buy a stock, there's what's called a settlement period, usually referred to as T plus 2, T being time, or specifically the time when the order was executed, and plus 2 meaning 2 business days. So you have to wait 2 business days, right? So this T plus 2 model is what Western stock exchanges like in the US and Canada is kind of what we operate on. And there's developments to try and make it T plus 1 in the future, but there's still going to be a settlement period, right? It's not going to be immediate. So when you buy a stock though on Robinhood, it shows you that you have the stock right away in your account. But in fact, the actual trade takes 2 business days to settle. And that's when massive volatility, like what happened with GME, when that happens, this could be a problem. Because Robinhood was waiting for the trade to settle, but they already promised you the shares of GME that you bought, which is already showing up in your account. So even if the trade has not settled yet for them, they give the stock to you. They post the stock to you, right? So clearinghouses, though, which are kind of an intermediary that sits between the stock exchange and the brokerage, they would need Robinhood to post collateral until the trades are settled. So according to Robinhood CEO Vlad Tenev, this was when Robinhood ran into problems because the clearinghouses actually jacked up the collateral requirements for stocks like GME by a lot. I think it was like over tenfold. I'm not sure what exactly the amount was, so don't quote me on that, but it was by a lot. Robinhood did not have that much liquidity to meet this new collateral requirement because they didn't foresee this whole GME thing, right? So they had to stop people from buying the stock, or else they would run into liquidity issues, being not able to fulfill the collateral requirements. Now, you can argue, well, other brokerages like Fidelity did not block GME trades. Well, yes, of course. Look at how big Fidelity is, right? They have what, like 7 billion or 7 billion, 7 trillion or $8 trillion of assets under management, something like that. So look at how big Fidelity is, and look how big Robinhood is, right? So yes, you can say that the bigger companies were way more able to handle the situation. That they didn't foresee the situation either, though, right? So they're just able to handle it because they're huge companies, and Robinhood at the time, I don't know what it was worth, like maybe like 20-30 billion dollars. So yeah, it's like it's just a matter of the size of the company. It wasn't because Fidelity was like way more prepared. Well, they were way more prepared because they just had way more money in the first place, right? So what I'm trying to say is that I don't think Robinhood really did anything malicious. And this was just an unfortunate circumstance that was unforeseen, that wasn't really their fault. And the only thing they probably did wrong was not explain the situation properly or simply to their audience and to their customers. But anyways, the reason why I'm talking about all of this is I think Robinhood still has a lot of value despite that huge hit they took to their reputation in 2021. So besides the GME crisis, the other major criticism against Robinhood is that Robinhood gamifies the investing experience too much. So they're actually making it too easy for investors who have no experience in financial markets to YOLO all their money, and that has caused a lot of people to basically lose all their money. And this is kind of a double-edged sword, in my opinion. So from a product standpoint, you always want to make sure that your product is as intuitive and as easy to use as possible. So I don't know what Robinhood can do for that besides purposely making their app harder to use, which will cripple the user experience. And I think maybe they could put some disclaimers or a questionnaire, and it's like, click here if you want to certify that you want to trade options and you're okay with the risk or something like that. But I don't think that will really do a lot because people will just click it, right? Like people who have no experience anyways and they want to trade options, they'll just click the disclaimer and click yes, even if they have no experience. So I don't think that's going to really solve the problem. And people will still complain and blame Robinhood when they lose all their money. So you guys know I'm a big proponent of the free market. So I think that people should take some responsibility for their own financial decisions. So if you invest in something that you don't understand and you lose all your money, well, that's not Robinhood's fault, right? That's your fault, basically. I hate to be so mean, but it is what it is, right? That's just the way the world works. It's just like how people blame McDonald's for making them fat. It's like, well, I think most people know that McDonald's foods aren't exactly all that healthy. And if you don't want to get fat, then maybe just eat less McDonald's, right? No one's forcing you to eat McDonald's. I think it's pretty simple, right? And if you get fat from eating McDonald's, don't blame McDonald's, right? Like, don't blame the restaurant. And it's like, don't blame Coke for giving you diabetes, right? Because you could easily stop drinking Coke. Anyways, I'm getting off topic. Sorry, it just bothers me sometimes when people, like grown-ass adults, don't take responsibilities for their own decisions. Especially when it comes to, their health and their finances and things that I view as very important. It's like, you got to take some responsibility. Come on, guys. My point is that I think that Robinhood does have a moat, and this reputational damage, I think they'll get over it. So I just put myself in the shoes of a new investor, right? So imagine if you're a new investor and you just turned 18 and you're going to open up your first brokerage account. Well, what are the chances that you're going to pick Robinhood, which is known for being the easiest way to get started, and it's a clean user interface on the app that is available on every app store you can imagine? And what are the chances that you're going to go with Fidelity and Schwab or any other brokerage that might, make you call them or book an appointment to go into a branch or anything like that, right? So I don't know that everyone would pick Robinhood. Obviously, some people might still be like, oh, for sure, I'm going with Fidelity because, they're more trusted, they're more established, and I don't trust Robinhood, right? Fine. That's you. But think about what most people will do, right? I think, in my opinion, most new investors, especially young investors, will still probably pick Robinhood. So going through some of the fundamentals of Robinhood, Robinhood is not profitable yet, so there's no price to earnings ratio. They're not profitable on a consistent basis yet, although they did post a positive net income last quarter. But anyways, in that case, if there's no PE, we can look at the price to sales ratio, which is under 6 right now. So it's pretty reasonable if you ask me. And the price to book ratio is just above 1. So price to book is like how much assets and stuff that the company has on their balance sheet compared to the price, right? So I think Robinhood is also a contender to flip from losing money to being profitable soon. Because last quarter, as I said earlier, they just posted a positive net income. And I think it's for the first time ever in the company's history. Correct me if I'm wrong. And if you recall, the recent run up in another stock, Palantir, from its low of $6 to at one point it hit like almost $20, I think. This was in large part due to the company announcing that they expect themselves to be profitable from now on. So usually this flip from being losing money to being profitable, that is a huge catalyst for the price of any stock who's going through this transition, right? And by catalyst, I mean going up catalyst. And finally, I promised that I would bring this back to PayPal for all my PayPal fans out there. So this is the moment you've all been waiting for. What does this have to do with PayPal? Well, I'm just going to throw this out there. I'm by far not the first one to suggest this, but I'm adding my voice to the mix. I think Robinhood would be a great acquisition target for PayPal. And when buying a company, we should look at the enterprise value instead of the market cap because the enterprise value backs out things like cash and debt. So it's a clearer idea of how much it would take to actually acquire the company. So Robinhood's current enterprise value is trading at just over $4 billion. And PayPal has more than double that in cash if they wanted to do an all-cash deal, which they don't have to. But even if they wanted to do an all-cash deal, I think PayPal could easily buy Robinhood at today's prices. And this acquisition would make a lot of sense, in my opinion. So PayPal is already one of the most well-known names in the payment space and in the financial services space in general. And PayPal has been trying to get into the investing space with the launch of crypto buys and sales. But in my opinion, right now, they're kind of just doing it half-heartedly, and PayPal has been doing the crypto thing for a long time. And yes, the stable coin is also a right step in the right direction. But I'm talking about actual retail investors who are, going to come on and trade crypto. If someone says, hey, I want to buy Bitcoin, but I don't know what website or app to use, I don't think PayPal would even come in the top 10 in terms of, people's choices and what people first think of. And this is just crypto, right? In terms of stocks, like PayPal doesn't even have any involvement in the stock trading space. Robinhood, however, comes top of mind for stocks and is probably among the top in crypto as well. So if PayPal can get Robinhood for around $5 to $10 billion, usually you have to kind of pay a premium in order to be able to acquire a company over its enterprise value. So maybe $5 to $10 billion somewhere in the ballpark. I think that it would be a fantastic addition to PayPal's already growing suite of products. And I know half of what I'm saying is hopium, but the other half of me thinks that there's actually a chance that this might happen. So the incoming CEO of PayPal, Alex Chriss, he was an executive at another company called Intuit, at another financial services company. And Intuit is an even bigger company than PayPal, by the way. So while he was at Intuit, he led the acquisition of MailChimp. So he was the one that was kind of the primary direct go-to that kind of conducted this transaction. And that was a $12 billion deal, if I remember correctly. So he has plenty of experience doing huge acquisitions. And I think that perhaps one of the reasons why he was chosen by the board of directors of PayPal to be brought in as CEO is because the board does want him to do some big acquisitions. But yeah, anyways, that's just food for thought. I'm curious to see what you guys think. Please leave down in the comments whether you think it would be a good idea for PayPal to buy Robinhood, and what do you think about Robinhood in general? Do you just think that I'm never going to go back to Robinhood because what they did with the GME thing, or are you guys more open, and would you guys ever trust Robinhood again? I'm curious to hear your opinions, so be sure to leave them down in the comments. And with that being said, I'll leave the video here for today. Be sure to hit the like button if you haven't already, and be sure to subscribe if you like the series if you haven't already. Be sure to follow me on X. I'll leave a link down below in the description for that as well. And with that being said, I'll see you guys in the next video. Bye-bye.